Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. Last week, I talked about the price thrust that we have. We had this huge 11-day surge in March, and I looked at some prior examples. And the one I was focusing on at the end was 2011, when we had a pretty deep pullback after that thrust. And today, I want to look at oversold conditions, how we can identify those, because they do fluctuate depending on the status of the overall trend. We'll look at using sentiment indicators as well to define bearish extremes. And then I'll show you a three-step process for oversold bounces as far as the condition you need, the setup you need, and a trigger opportunity. So I'm working right off of the TrendInvestorPro.com website here. This is the main analysis page, and we have the market regime page that we update every week, bull market or bear market. I've got an ETF trend signal table and a ranking table, 274 ETFs on that. And I'm going to scroll down and I'm going to look at the commentary for Thursday, April 7th here. Also, I did a video on Wednesday. Every Wednesday, there's a very detailed video on the market environment and the ETF setups that are working. So I'm going to click on this link here and work off of this commentary today. So what we're seeing is defensive groups are leading. And I'm going to go to an interactive perf chart now on StockCharts.com. So stocks were hit on Wednesday. You can see there's SPY declining 1%. And the growth names were leading the way lower. But what's interesting is the defensive groups actually gained. It wasn't like they went down less. They actually gained as money moved into these groups. Utilities, staples, real estate, healthcare, all up more than 1%. And then we look at the leaders on the downside. The Qs, the semiconductor ETF, SOSX. We have the Russell 2000 ETF, small caps down 1.42%, and growth down 1.9%. And this is not good because this is where the offense is in the market. This shows risk on versus risk off, basically. And you can see it's risk off because money's moving out of these riskier groups and into these safer defensive groups. And if I back this out 7 days, we can see that this has been going on for a while now. Over the last 7 days, these ETFs are down 4.83% or more. Semis are down 12%. Meanwhile, these four defensive groups are actually up over the last 7 days. Now, here's a perf chart I showed in my commentary on Tuesday, and it's basically looking at these defensive groups, and then I was looking at the key groups that are lagging in the stock market. So again, this is going for 1 month, and you can see the defensive groups are up, financials are up but lagging, and then we get regional banks down 6%. Then we hit the semiconductors down 2.3% the past month. We get to the Invesco Equal Weight Consumer Discretionary ETF down 2%, retail down 1%, and housing down 14%. So this group of laggards here is quite a concern over the past month. And you can see SPY is up 3.3%, and yet they're down. And if we go back to, let's say we go to year to date, we can see that's even more pronounced. They're the defensive groups leading, and then we got financials down, and the rest of these offensive groups down even more. And this is creating a big headwind for the broader market. So there are definitely some headwinds out there for SPY because of the underperformance in these key groups and the actual declines in these key groups. And we can see here we had this 11-day surge, 10.7%, and we got above the February high, but came down pretty hard. And this was a potential reversal zone, this blue zone. And I marked it that because you had three things coming into play. First, you had a support break that turns into resistance. That's a classic tenet of technical analysis. Second, you have these February highs that mark potential resistance. And third, you retrace 2/3 of the prior decline. So you come down 3 steps and you move back up 2 steps. And so you get overbought, and all three of these things coincide to mark a potential reversal zone, and then you fail to hold above that February high. So we've come down. We're in some sort of a pullback or continuation move lower. So the reason I say one or the other is because you look at the performance of these key groups, and that's got to be a big concern out there. And then on the other side, the trend composite didn't turn positive. So that means we got to also be on lookout for a potential pullback. And what I want to show you now is how we might identify that pullback. So if there's one thing we know about markets is they're dynamic. And not all pullbacks are short and shallow. Some are deeper, some last longer. In other words, there's no one size for a pullback. It's like a piece of string. It can be either 5 inches or it can be 2 yards long. We just never know. If you look here from March until August here, the pullbacks were very short, lasting maybe a week or a little longer in this case, but not much longer. And just a few days here with these red lines. And you look at, this is RSI 10, and it did not become oversold. So you had to use something more sensitive like RSI 5 to identify an oversold condition. And RSI 5 nailed 4 of these oversold conditions in this advance from May to that August high. But then you had a deeper pullback, and RSI 5 got oversold several times. But if you went to RSI 10, you got oversold once, and then you had another test, and then you had a little breakout there. And then if we look at these pullbacks that we've had in 2022, they've been much deeper. They pushed RSI 10 well below 30 and below 30 here in February. So the point here is that you never know how far a pullback's going to extend. So we need some sort of a strategy to set the condition, set the setup, and identify a trigger. And let's look at that. So on this chart here, I've got 3 indicators. And the first one is at the bottom. It's the trend composite. And I'll show you how I can chart these on StockCharts ACP. So the first thing is I want the condition to be an uptrend. And that's when the trend composite is green. All right. The second thing is the setup. And the setup is when the momentum composite turns red. And that means that at least 3 of the 5 indicators in the momentum composite are saying that the ETF is oversold. And then the third thing we need is the trigger. And the trigger is when you get a Stochastic RSI surge to 0.80 or above. That's like a little momentum. And the green arrows on this chart show when you get this condition setup trigger sequence here. And you can see there haven't been that many. We got one in early November, and that was a good signal. We had a little pullback, and we got another one in early March, and that was good. We got another little pullback in May, and that led to a good signal. And then we got a bad signal on the mid-September trigger there because we fell back, but then we got a good signal in early October. And then we had this 6th signal here that didn't work out. And then we broke down and we turned bearish on the trend composite in the bottom. And so that means I wasn't looking for setups or triggers during this period. But now the trend composite is positive, so I'm open to setups and triggers. But if you look at the momentum composite, it's at 0 and it is yet to set up. So until it sets up, I will not be looking for a trigger. Now, a trigger can be that Stochastic RSI pop above 0.80 once the setup happens, or you can use a pattern like here we had a falling wedge, or you can look at your candlesticks if you will. Here we have maybe a little falling flag. Here we had a little pennant probably. So you can also use patterns and candlesticks if you like for a trigger. Now, as I said, that these trend composite and momentum composite indicators are available for StockCharts ACP. And if you go to the bottom right, there is the plugin icon. And if you scroll down, you will see the Trend Investor Pro Indicator Edge plugin. And you can click that link to learn more about these 2 indicators and how they work. Now, another way to identify a possible playable pullback is with sentiment indicators. Now, sentiment can be a bit tricky, I admit, and I don't use it very often. But if we look here in actually since December, we've got some sentiment extremes that have picked some pretty nice little short-term turning points. So I've got 3 indicators. I've got the percentage of AAII bears, and when it goes above 45%, I consider that to be excessive as far as the percentage of bears. Then I've got the VIX, and when it goes above 30, I consider it to be showing signs of excessive fear. And then I've got the put-call ratio. And this one's kind of weird because it fluctuates a lot. And so I put some Bollinger Bands on there. And when you get above that upper Bollinger Band, that shows an expansion of put buying, especially if you're above 1. That means you bought more puts than calls. And so that means there's some fear out there because put buying is increasing. And so what I did was when you get 2 of these 3 showing excessive fear or bearishness, you get a potential bottom, or you get an alert that says, hey, look out for a potential short-term reversal or short-term breakout. And so we got a nice one in December. We got a nice one there in late January, and we got a nice one there in early March. And then if we go back further, we can see in February 2021, we had one. There was nothing up for almost a year, up until December. So a long time without a signal. And then you can see this signal didn't work out because you continued lower. And this one, yes, you continued lower, but you would have been on alert for a reversal, and we got a nice reversal and breakout there. But if we look at current conditions, bears are below 30%. We don't have excessive bearishness. The VIX is below 25, so the VIX is not excessive. And the put-call ratio is not near its upper Bollinger Band, so we haven't seen a surge in put buying, but that's something I will be watching going forward. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.